Flip equity. 1 second. I think I have time. Oh, where's my edit audio? Okay, I think I got it. I was trying to do a thing. It didn't work. So the thing's not gonna happen. Basically, me myself as I talk, which is already obnoxious, I know. But okay, so pre-market starting. What are we doing? Where are we at? Oh, it's not good. All right. So long-term SPY looking fine. We've got some gap fills from before. Oh, I didn't notice that one. So let's mark that one too. Very close, and it looks like we might be doing that. I've noticed from the top, we've kind of filled. Did we fill? No, we didn't fill this one. This one was a problem too. All right, so we never filled this one completely. That one's still on the board. However, since we attempted it, it still has a chance, just not now. But as far as order goes, the next gap filled is already filled over here. This one just got filled. You see the gap there. This one looks to be next if it follows the order. No guarantees. But it's not bad as far as where we are. The longer term, still above the MA 200. That's good. Shorter term, little struggling. Little struggling. In fact, not really picking up a good pattern in the pre and post markets. You don't really want to trade these low volume spaces anywhere that's not in the daytime. However, I have noticed patterns, these small patterns that may travel to the next day. So this one's breaking down from the channel. However, if we stay above, well, first, if we stay above the MAs, that's good. So far, so good. It is trying to travel on them. That's fine. But we are on the cusp. I would say a touch point right here. We want to stay above this. There's a touch point, couple of tests. There's another touch point, another touch point. Touches are great. Bodies are great. Anything else is just kind of empty space. You don't really care about it. Oh, uh, um, so that's what we're watching for now. I have the ticker floating around, so you're gonna see some details happening from first one that started as the latest to as it goes forward on that ticker marquee floating up there. It's gonna go to the last 3 days or 4 days, kind of picking out the main headlines. However, the issue, if I can put it on, throw in some, what are my utilities? Did I even add it to utilities? Hold on. So this was kind of the trouble. Nope, backwards. I don't like this. I like the other way around. Decimal, my eyes. There we go. All right, so 160. One. Okay, wait. This is when the issues happened. Right here. So what happened was, uh, Japan's yen was inflating yet again. They kept trying to cool it off. They had to do that with, you can see kind of the continuous growth in the inflation and the process, especially current market conditions. But each one of these big points of drop down here and here and here, those were manufactured to try and push it down. You can see how often it happens. It's not your, I mean, it is your manipulation because you own the currency and you need to adjust it somehow. So Yeah, technical manipulation here. Now they did it so much, but it kept coming back. No matter how many times they pushed the yen down, the sucker didn't want to go down. But you notice the gaps. It was very often. Try to keep pushing it, kept pushing it, kept pushing it. But then after this one, a big gap, bigger gap, they ran out of juice. How did they do that? Well, it's bonds. You take your Japanese, you make it, I don't know, a couple million, sure, work. But also, you can borrow money at a positive or reverse that negative rate, which would be a positive income in your pocket. So, like, here's some money. Also, thanks for taking my money. Here's more. Cool. Doesn't make sense. Uh, so that was kind of a loophole. Call it a matrix glitch in the monetary fiat system. So you were able to just get a bunch of loans, invest them to whatever timeline you're looking at, invest them in the US market, and cause a freaking giant bubble. Not only that, 2008, our banks in the US decided to basically 80% those bailouts into their own stocks. That's cool. That's nice to hear. Always concerned about the general citizen, as per norm. So you got all these kind of ticking time bombs. That's really the problem here. Normal markets go to the moon, fine, but it's look at that bleed. So what happened here? Well, the jobs data SAM rule triggered, or the rumor of was discussed because you have insiders, and eventually it was completely triggered. God, when was the SAM rule? Hold on, it was in the last few days. Yesterday or the day before? 1 day ago. 1 day ago. Let's check the day candle. I mean, yeah, you got insiders. They know about something happening. How do you break down through so many MAs so quickly? Look at this MA breakdown. This should be the hardest one because it's the long 200. That just went straight through after they figured that one out. But damn. And there's you go. July 31st. And the end of the month, we break through a very crucial point. So, welcome to the month. August is not so good. Um, go over some utilities. Not the typical you think of, more like tools. Oh, here's my BTC and SPY process here. Uh, I mean, right now, up looks promising. Got a up channel developing. Up means BTC win. But before we even talk about crypto and, oh, it's a hedge, it's all assets. The Japanese investors with extra money in their pockets, plus extra loans, plus extra percent interest in their own pocket. That's everywhere. Assets. Assets mean any crypto is an asset. Real estate, probably. Commercial, I can't imagine what's going on there. It's already a problem without Japanese intervention. I imagine real estate investors as well. What's going on? Fiats, golds. We're gonna have this flush of liquidity. I can't remember where I heard it. Seven something trillion, 5 to 7. I'm guesstimating. Could be more. And as far as I heard, 1/4 of it just out from the last chaos up to this point today. There's probably 3/4 left. That's why crypto is going down. That's why stocks are going down. That's why everything's going down because these investors need to start paying. So they're getting their gains and now they're paying off and returning their loans. That's money leaving the market, hence liquidity ceiling. Been kind of crying that out for the last 2 months. If you communicate in the community, dude, gotta pump it open. Don't know who you. You're gonna get random up in that like to say words without meaning or even detail. Oh, okay. Let me see. XRT, no skew. Someone was talking about the skew the other day. I take them with a grain of salt, just as I do the VIX currently. I'll play the VIX and its derivatives, especially any leverage ones like UVIX, but to trust it as an indicator, I mean, okay, you know, I will say technically, let's backtest it. 21, it does scream something, right? Crash. And then something here. That recent? That's not good. What else? Hmm. Da-da-da, going back in time. Where's that dinosaur? I mean, even 2008, 9, look at where it based. So if you're looking at this, yeah, we've been on red alert for a long time. This is 2009, right? No, yeah, right after all the chaos. What? Hold up. Yeah. I mean, it's just one of those times. We can argue we've been on high alert up in this space, considering the how freaking high top it is. So we've had instances of chaos. There's your 2021, but even 2018, there was like an interest hike attempt to bring it up from 0.28. And our business people, our lovely CEOs started bitching, moaning that their investments now are starting to leak. You've had since when? I think since like the end of 2010 when interest rates dropped. They even tried in 2010, 11, and they had to drop it because our bankers whining about interest rates when they've been leveraged and placing themselves in the wrong places on a leverage base. Low interest does not mean overextend your freaking credit. I mean, if you live in the boondocks, maybe in a trailer park, sure, but we're adults in a financial space, all right? You get zero interest, something's iffy, it's time for productivity, not easy, empty money. But that's what our environment was, and our bankers and our corporations, whoever was connected to any sort of fund, got a bailout, and they reinvested. Oh, I'll tell you about my theories on the overall chaos on the market. DXY, how's that doing? Hello, chaotic.com. Yeah, right. We broke down from a very, very important place. I believe we broke down. Oh, not yet, not yet. Oh, wait. Yep. Okay, we bounced up. Why is it locking me? Stop locking me. There's that DXY go down, market go up situation. But this is also a thing that really bothers me. That's in a normal market. If we think of the concept of value given to paper, and we call a dollar, the value to written paper, with inflation, that doesn't stay the same. So if your dollar goes down, it means you can technically buy things cheaper. You're well, cheaper, quote unquote. You're just gonna, well, cheaper, hold on. You're gonna have to use more physical papers. Cheaper in the case of the value stays the same, but you now have to use papers instead of one. It's kind of on the opposite side case. So if it goes down, then we should see markets price upwards. Now more dollar values are required for that value that SPX is trying to represent in US dollars. But but that's not what's happening. In fact, we're going down, the whole market's going down, the dollar value is going down. This scares me more because if our own weakening value, dollar, can't even sidestep, like have our market, our SPXs and QQQs just go sideways. Because if it goes down, the market goes up. But as the Japanese take out, the market goes down. So if you balance it, right? I'm thinking mathematics here, but because both of them are going down at the same time, I see some extra weight. Because technically it goes down the XY, your SPX goes, and vice versa. So that was an interesting turn that didn't quite make sense until I really thought of it as very, very strong weakness. Uh, check money supply. They changed the DE40. Why? What do you mean? What is? What do you mean? It's DE40. Whatever. Germany, how they doing? They're bleeding too. We haven't even gotten to Japan yet. Hold your horses because they went down hard. Germany being affected last week, in the last few days. There it is. They've also been affected. They're on a downtrend daily. It's going to give you a weekly negative trend. Is probably to, yeah, something like, I'm going to go with too small, too tight, narrow. The halfway point serves a good bounce point. So yeah, it looks like they're going to probably bounce here and we're going to have some sideways chop until more weakness. Oh, industrials. Oof. I mean, I was playing around in here, found a nice triangle, and they like to play around with your head. They'll like drop it below the triangle, but as long as it holds up above the previous low, you're fine. Don't freak out. But then it's like, hey, let's go up now. We're gonna make it all go up because we're trying to make the market look good. And then all of a sudden, oh crap, Japan. It doesn't do that. You don't have stable markets. Doesn't This isn't NFTs or whatever, crypto. They don't just smack around the logical steps. PCC puts her high, puts her very high, puts her not the highest. Oh, wow. What happened here? Oh, look, 2008. No. Oh, that's nice. I suppose we have competition. So what are our breaking points? This one's decent. Probably adjust them with time. That one's good. Oh, look, we're jumping into some heavy waters. Okay, that's great. How about market and gold? Comparison what? Very side chop. It's normal for gold to sustain a value. And especially if you currency issues, yeah, it went down, but it's gonna probably pop back up with a little breather, and it's gonna probably play around the MAs until potentially breaks up because there's form. This is very bullish. I mean, we've got a small breakdown channel kind of forming right over here to break down, but it's already a good spot. It might bounce again. Keep an eye. I mean, this can change. Now, the case here is if it goes up, market's good, goes down, gold's good. If it's that sidesteps, just stick to what you got. If you don't got these, cash or crypto is the output. How about TLT? That's got to be all right. The TLTs are coming in hot. Market falling, TLT taking over downwards. See? Just remember in fractions, right? Base mathematics, numerator up, denominator down. Think of it that way too. The bigger the number, the direction you're going to be looking at on a chart. Oh, WM and the NASDAQ. I mean, both of them have been a steady bleed down. Wow, that means, are they, hold on. What's the value? Zero. Division won't give me a, wow, what is, that does tell me something. What's it tell me? The small caps, the tech sector. Tech sector is dragging everything down. It's on the bottom. Small caps were good. Okay, so small caps were good. Oh six, here you go. Oh six, always in turbulence. Small caps tend to work good while the rest of the big boys start to collapse. And then the Nasdaq overall dragged down the small caps, dominance at the bottom. But I mean, we've exhausted the possibility to go further. What's the decimal? Tiny AF 0039 something. So it might be time for, I mean, for sure, small caps are going to be good buy. And there's going to be some good bled out companies like, God, what was it Rivian? Let me check Rivian. No, I didn't have enough of a historic value to really judge it. I mean, it's a good buy. You've got a nice steady incline here. Gonna balance up on this space. So now you're gonna be playing around this liquidity area. If it takes that over, you'll be going up above. Definitely get hit right here. High turbulence. Market might not work. So that's not one of our van, I believe, was. Oh, CVNA. God, not one I look up very often. Not a fan. No, this was a type that was good at one point, but that dip was already bought. That was one of those. Oh, OGI, actually. If we're talking certain plays that haven't been given the chance to fly, here's a case for OGI, my MJ move. I like the fact this space is a we don't want to be there. This one was just confirmed that we're good with and we're kind of working on it, but technically, if we break below, we're pretty effed because we're trying to test this space, which also tests this space, which if it fails, then the only option is down. So given that, and it's already been pushed down heavy. It's got some there. Those were interesting. Sentiment's pretty decent online in the MJ world. But if you want to play MJ, just play the MJ. Literally just MJ. This one though, this is kind of what I'm looking for. When I'm looking for any stock, and I'm probably gonna dive into this one. At the down. That's the problem. We've gotten beat down so many times. Had this pretty cool euphoria. Remember, every money on an upward bull market, they're the genius until the market goes down and then they start whining about stuff. But this is kind of like the maximum. See that there was interest, but this is a very stable place because low interest, people were going crazy, buying up stuff. Stable place as far as an overrated money market. Drop down half. I can see this as our next base that we want to take over or our actual focus. It's not really a red case, it's a green case, or I call it blue. Green's too manipulative for money. So we want to get in this, and potentially that's where we're headed. Um, daily. Ooh, daily grabbed onto the MA, right? No, 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 no. Drop down, drop down. Hold on, let me get these. Yeah, let me. Oh, see, that's gonna be everywhere. Watch for liquidity to pick up. I'm probably buying this at the yeah 2 to 3. Heck, if it gets down here, but no, there's gonna be heavy liquidity. The one thing to always keep in mind, not to forget volume. Everything happening in space is happening with the inflection of this much power. If direction is down, you want to know the power in which it manifests. How big or strong was that push? A bit pretty push, but in also cases it held on, which means that green bar popped up. So more than 50% of sales were higher in the buyer side, frequency, velocity, movement of something. So more buyers came in and gobbled it up, which means there's a huge buy bias down. As soon as it gets down here, velocity picks up, more people start buying. Up here, you see velocity die out. Here, not so much. Everyone's watching to see what happens, sold out, and just watch the MAs fall apart, etc. So those are considerations. Now, this location is probably not going to be visited again ever. I mean, considering that, yeah, no, well, we don't have enough history to figure that one out, but pretty cheap price unless like it becomes authoritarian, illegal everything except work environment. I'm pretty fine. Um, where's my inversion? Sky, fields. This is difficult to really grasp here at first. Maybe it's actually a leap back to the normal. As we approach this timeline here, this peak up to this fallout, right? 1 to 3 is a pretty average timeline to make average money. Interest rate, lock it up for this. Maybe you got a business proposition for a new office building, 5. So 1 to 3 sounds pretty good. 5, you'd be rushing it to the end of the schedule. You got all your money you need to actually get the business proposition started. So that's good. But then there's this thing about if you don't want to lend out from a 1 to 3 year period, it's not because, oh, I don't want to do it. Well, normally it's safe money. It's supposed to be safe money. That's kind of the key concept here. Treasuries are safe money. So if you're not investing in a 1 to 3 and you're focusing on the 2 or just a straight 1 or even the 6 months, the money market funds and all that crap they made recently, or try to alleviate some pain and bleed out of the currency, you're afraid of something happening in that 3 year period. So as it started going down in demand from 2020, I started getting suspicious that, hey, something's happening with that one period. So this is 2020. Here's the second year, but call it at the edge, crisp here, cusp here. Call this beginning right there. 2. Come on, come on. 23. And it kind of plays a 24, 23, and then 24. It kind of plays a good part. And actually, this is the end of the year. So consider this the ending point of the 2020s. So, boom, we had interest and everything's fine. Injection, right? Maybe stimulus injection, everything's okay. Money market's moving, flowing, velocity. And then as time passed, less and less interest in the 1 to 3. And then it just completely, people got scared, meaning that I don't want to lend or I don't want to close off my money for 3 years. Doesn't sound good to me. Something 3 years from now, I don't know what's going to happen, quote unquote. That's the concept I'm looking at when this happened. And then it's like, uh-oh, start to investigate the details. I'm sure insiders know a lot about this stuff before we do. What Japan's doing, they're talking amongst each other, having problems. They're like, oh, JP Morgan, yeah, I'm Japan. My bank's messed up. What do I do? You're a professional. Oh, is it now? Yeah, let me help you. Short button on the side. American humor. You can ask Nikolai Tesla. So that's kind of bigger of got a lot of fear popping up for 1 to 3. So something is getting close. If it pops back up, then the fear is alleviated within that space. So if this goes back up, then maybe we're done, hopefully. Or at least 1 to 3 years forward will be done. That's kind of really the point of bonds is to lock stuff up, even through tough times, as long as your expectations is after that time period, everything's back to normal, if not better, and overinflated, as everything tends to do in a non-gold standardized fiat currency. So that was kind of my first hints I started watching way back here, that little downward trend here. I mean, it was very consistent. They were like just milking off whatever they had until they dropped everything. Because they don't want to, of course, give fear. But everything else looked good, blah, blah, blah. All right, I'm done. Banking. XLE, finance, Eela's energy. Finance, I'm very skeptical of. The weekly outlook, not at all. It got denied on the MA 200, already very low. And every time it denies, look at that drop. Look at that drop. These are banks. And they've been trying to keep this space for, well, ever since good old 2008. But you know, if history tends to rhyme, I'm gonna be expecting us to retract and test this area on the KRE. Watching, of course, the typical MA movements, but it's already being rejected. Like that red is gonna push the rest down. So I'm almost even thinking, hey, you know what's gonna happen in a week? A big red candle of banks falling apart because of this Japanese issue. So I'm actually watching for that. But what's the trigger for that? Jerome Powell out of nowhere saying, "Oh, we're cutting rates now. Bye." Why? Why? Why do you cut rates? Because the interest is too high. Interest is too high, and you just can't pay it. So who's trying to boast this new interest cut thing? All the freaking journalists that are getting paid by the hedge fund. Oh, the 80% chance of a rate uh rate drop, cut, whatever. Personally, if we take apart inflation and not by the way we lie, but with old way of doing it, I got an AI for this if it can be heard. Can you tell me what the current CPI interest is? And at the same time, can you tell me what the value was or would be in the older way that we used to track inflation?
CPI interest rate is not fixed value, rather a measure of inflation. As of now, the Consumer Price Index, CPI, is used to track inflation. Older way of tracking inflation was through the Retail Price Index, RPI.
Okay, can you give me both numbers?
Checking current CPI and RPI values now.
RPI, that's the one.
Consumer Price Index, CPI, is 2%,
Hmm.
and the Retail Price Index, RPI, is 2.9%.
Okay, not a big difference, huh? But when we were at a peak 8%, see what it was. RPI, retail price index. You can't even find it in Google. You gotta put in a word. No one looks for this. Give me a graph. Give me the graph. Retail price index. Oh, Royal London. Can I get a Fred chart, please? Hmm. Consumer price index. Retail price. Is that both? Also, consumer price. All items. United Kingdom. Fred, you're the St. Louis. Fred, not the United Kingdom. Fred, what are you doing with their detail? Price inflation time. Consumer price. Retail. Real personal income. RPI. Fred St. Louis. Okay. 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 That's not. There was a number that came off with this. I can maybe find that number. Probably take that larger number. Sorry, I'm just doing right here. I'm gonna shut up now. Oh my God, 10 minutes. So, okay, that's my bad. 2 minutes in. I got this. Okay, playing the space here. Not looking good. It's below two MAs getting pushed. Just broke down 20. 50 keeps pushing it. In fact, it was fighting with the 50 in the pre-market. Did not win. Does not look good. So we're dropping for the gap fill. This this is just a very strong liquidity area. If we have an okay landing, we're probably gonna go between 498 and 4502. We're gonna eat up this liquidity. We're probably gonna side chop, potentially between gap fills and this on the top side. So we're kind of entering that. But that's only if, like, let's say the banks started crashing and we didn't have the Japanese liquidating and have retail or, sorry, commercial real estate on the brink of destruction. So, a lot of other ifs. Oh, okay. Community time. Let's see what's going on. Your money on the line. Let's see how 5:30. I'll mute myself for a bit and relax and start doing some Not looking good. I mean, full volume, but get out of that range. Not looking good. It is have a higher high, that's fine. Full volume, but okay. That volume pickup good. Still got a lot to go. And I do it in one bar. What? Okay, okay. Maybe. Starting to get some cell zone up here. Cell zones, force it down, but it needs to touch both. At least needs to touch the next one, bounce down. Fresh. My God, that's too perfect, right? It close. If it closes inside 5 minutes, kidding. Below that. Okay. Oh, short lived. There comes 2 minutes left for this candle. When this happens, buyers just line up, buy as much as they can, and the sellers after just kind of trickle out. And I'm also listening to the news in the background, so hopefully it's not distracting. Oh, it's back under one candle. These are the kind of things that make me think anything with a long tail like this, especially on the side that you're hoping it's gonna go towards and it dies, liquidity pumps. They're just trying to get everyone excited for a reversal, and then they just keep on taking money. Bag holder. Um, let me check volume real quick. Checking volume. Was it though? But I can change this actually. This is garbage, garbage. Volume profile. Yeah, literally just click it twice. Give yourself the indication. The other one, bearish case. I don't like red. I like red, so I normally do off orange. So personal. Yellow is no way. Technically yellow. And yellow is overlapping, which is cool. But watch here. Oversold. Cool. This section, very oversold. This one's a lot more. Unless new liquidity comes in to fill in and push these further. Stuck here. These are all bag holders. They're sellers right now. That means space for buyers to come in. But the weekly, so very long term. Let's go on the forward. So, same thing. Got a lot of sellers here and more buyers trickling in. exactly where the split is. And the asking price is gonna essentially be in between the final close price. I mean. And then as you see green top and red on the bottom, time to get out because too many buyers and it's not going up. No bueno. Here, these buyers sitting waiting. Open range colors, right? And you're gonna probably start seeing that swap back and forth. Volume, man. Magic. Literally the easiest. I mean, take movement, velocity. Right now, buyers are stacking up, buying it up, but handle with 47. So buyers are getting exhausted very early because there's not sellers, right? Then it's gonna stop at the max the buyers are done at. Sellers start trickling and eating up. Buyers stay up. Sellers probably match, right? Buyer is gonna always buy above the price because they want to get in because they're excited. Your seller is gonna try to sell below the price. They want to get the heck out because there's a crash happening. So you always see green to red. Oh, red. Hold on. Like darker. Yeah, give me a here. So okay, all right. Oh, oh, buyers and sellers are equal. So who's gonna get in and who's gonna get out? And that's kind of watching this for a bit and then do some stuff.